just as we are monitoring earnings. A number of U.S. players reporting quarterly results, but we also just got results from the plain T-shirt maker Gildan, where the story there has been anything but plain. There is a very contested future. Who should run the company? Andrew Bell is here for a look at this story, and for analyst perspective, we've got David Swartz with Morningstar. Andy, let's start with you. They've got to show that they're still, minding the business. And how did they do that? What does progress look like this quarter?
It looks like they beat expectations. Amber, you mentioned this earlier. Profit per share coming in at 59 cents. The estimate was for 52 cents. And they're also sticking with their forecast for the year. And it looks to me as though they're slightly increasing their margin. They are expecting adjusted operating margin for the year of 18 or above 18 to 20%. And they still see adjusted profit per share of as much as $3.07. So they're sticking to their guidance. I was plowing through this release to see was there any mention of the bitter proxy fight, and of course that annual and special meeting is set for May 28th, so not long now, just under 4 weeks. They do say that in the quarter they handed out goodies to executives and other employees, special retention awards. Now, these were stock-based, but they cost the company, or they have a total fair value of about $8.6 million. So they've been trying to, they've been worrying about crucial people leaving, it seems, and they were bribing them with, bribing, that's a pejorative word, they were giving them stock awards. Now, I don't know if they were, it looks to me like it wasn't cash, it was just options. And they've also been racking up expenses, advisory fees, partly related to the departure of the CEO, the firing of the CEO, Glenn Chamandy, co-founder of the company, and also legal expenses, because they have said, Amber, you may have mentioned this, that they are open to a possible transaction, a sale of the company.
That's right. So, so many moving parts to this one. And then, oh yes, how did sales go? Yeah. And so, those were kind of tepid. I hear you that they were above expectations, but still, they did fall. They're down about 1%.
Yeah, but they beat expectations. You're right, down about 1%, but they came in at $695 million. What a huge company this is, almost $700 million in the quarter, and that was in line with the estimate. So it doesn't look like there's any great surprise in these numbers. They did buy back a pile of stock, and they said, in fact, $7 million were returned to the capital, or sorry, $57 million of capital returned to shareholders during the quarter.
Thanks so much. Nice. That's Andy Bell going through those results. Our next guest is the only analyst with a sell on Gildan. Let's bring in David Swartz with Morningstar. David, thanks so much for joining me. Let's just talk the quarter, a sales slowdown showing up. You've got a sell on the stock. Are you concerned about the outlook for the business?
I think the stock's a bit overvalued, not egregiously overvalued, maybe a few dollars in both the Toronto shares and the New York shares. At times, I think it's been quite overvalued. Right now, I think it's a little bit overvalued. It's not that I necessarily think that the company is not doing well, but as you mentioned, the sales growth really is pretty minimal. It's not a high growth company, and I was a bit concerned that expenses in the quarter were quite high. Now, the company did beat my estimate on an adjusted basis, but on an unadjusted basis it was at 47 cents, which is what I had forecast. And it does look like even if you exclude all the expenses related to the proxy fight and to the one-time awards, that expenses were still a bit high. So that is a bit concerning. Also, the hosiery and underwear segment, which had been doing a little bit better, actually missed my revenue target by $10 million in the quarter. So this is a company that's very, very dependent on a really volatile industry, which is in printwear. And we've seen over the last few years that it can go up and down pretty dramatically at times.
I think that's a good point to call out the expenses at a time where growth is stalling, and rather than investing that in potential growth areas for the business, they are distracted, or those dollars are competed with this, I don't know if you call it a sideshow, but it's not germane to the operations, at least on a day-to-day basis, on, who's going to control the company, who's going to run it going forward.
Yeah, it certainly doesn't help. This has been a company in turmoil since December, if not even before that. and it may not be resolved with the vote coming up. We don't quite know what will happen. It looks like many of the institutional shareholders are going to vote in favor of the Browning West group. If that happens, then the company, I guess, is going to fire its CEO, bring back Glenn Chimandi. It's going to be a complete overhaul of the business. If that happens, it looks like the company will not be sold because the institutional shareholders apparently do not want the company to be sold. I personally think that if they can get a high enough bid, that they should consider a sale. But that is because, as you mentioned, I think the stock's a bit overvalued. The institutional shareholders really think that this stock is going to $100 or something in a few years, which I think is a pretty unrealistic expectation.
So with all those moving parts in mind, I mean, can you even make do a scenario analysis of what does Glenn Chimandi coming back mean for the stock versus, if Vince Tyra and his crew are successful?
I really don't see why it would matter that much, because this is a business that sells blank T-shirts and sweatshirts and stuff, and they've been doing it for many, many years, and they do it very well. But this is a manufacturing-based business. The company, I don't think, is going to go in any big new direction, no matter who the CEO is. Now, the board has claimed that Chimandi wanted to do these major acquisitions that would have changed the business model, but I don't know if that's true. But he says that it was just something to be considered. But for the most part, this is a business that is still going to be dependent on printwear, and that's not going to change.